Elder spike trading community. We implement Elder strategies in the software, and you'll see them in action tonight. In fact, our software implements the techniques of various popular strategists, Larry Connors, Gil Morales and Chris Katcher, Charles Kirkpatrick, and others. And our webinars highlight their strategies in play. A little information before I introduce Ray. We expect the presentation to run about 90 minutes, and we'll take questions throughout. You will be muted, so please type your questions in the panel, and they will be answered along the way. If you have any questions or comments after, please direct them to me at the email address that I show up on the screen, debmoses@highgrowth.com, and I'll make sure that any questions or comments get in the right hands. We are also taping this, and it will be posted at our website Learning Center. The address is on the screen within 24 hours. We will also post PowerPoints and other materials that Ray is providing. Now, before I introduce our speaker, I want to make a quick note about the seminar that we sponsor semi-annually that's conducted by our strategists Ian Woodward and Ron Brown. And that's held in Palos Verdes, California, this coming October. It's a Saturday through a Monday, October 22nd through the 24th. And it's not too late to sign up. It's a great opportunity for new and experienced users to delve into top-down investing with Woodward and Brown. So you can check out the event at the site I show on the screen and also register there. And now to our presenter. Ray Ebert has had over 20 years of experience as an investor. Earlier this year, he was selected to be an elite spiker on Spike Trade. That's the community managed by Dr. Alexander Elder and Kerry Lawborn. In his first quarter as a spiker, Ray distinguished himself by winning first place for equity and second place for points in the weekly competitions. Woodward and Brown would describe Ray as a type 1 and 2 trader. Tonight, he will present his end-to-end trading process. Ray has a background as a biomedical scientist, and he currently works as a clinical trial specialist at the National Institutes of Health. So Ray, I'm now going to hand it over to you.
Well, thank you, Debbie. Can everyone hear me okay? I'm using a headset, and I'm hoping that it's going to be clear. How does this sound so far?
Could people type in something in the way of a yes if they can hear Ray okay? Good. We're getting some sounds good, a little static.
Okay. So I'm going to try to continue with this headset, but Debbie, if I start to trail off, let me know and I'll take it off and just hold the phone.
Getting lots of goods. Okay. Generally good.
So can everybody see the first page of my slide deck, Prospecting and Trading?
Getting yeses on that too. You're fine.
Okay. All right. So here we go. Thank you all for joining. I got a little preview of who's with us this evening, and it seems like we have a lot of HGSI folks, and we have a fair number of Spike Trade folks as well who have joined, and there's probably a third group that's neither. So welcome to all of you, and I will try to tailor this talk to each of you so that I don't lose the spikers on HGSI and vice versa. So before we get started, just the usual disclaimer that I'm not providing any investment advice in this particular presentation, and your investment decisions are your responsibility. So we'll get that out of the way. And by the way, this slide deck will be made available after the presentation, so don't worry about trying to grab all the details. So a little bit about me. Here's the plan for this evening. I'm going to tell you a little bit about myself and my trading background. And then under the heading of planning the trade, that's where I'm going to focus on how I make my picks, how I prospect, what is my approach to making my picks every week. I do that only on the weekends. I do not add or subtract to my pick list during the week. And then actually we'll give you examples of some trades that I've made going back to August and also in particular the last 2 or 3 weeks on Spike Trade. And as Deb said, your questions are welcome at any time. And I think you can type them into this chat box as well as send Deb an email. And periodically I will stop and maybe ask for questions, or Deb can interrupt me at certain intervals, so we can try to make this as interactive as possible. And at the end, if you have any stocks you'd like me to look at now that after you've seen what my approach is and get my perspective on your stocks, your crystal ball is as good as mine, but I'll be happy to give you my opinion on the stocks. And that will also give you some insights into how I narrow down my picks to the few that make it through the week. So a little bit about my trading experience. I've been doing this a long time, but I wouldn't say I've been doing it well for a long time. I missed the big boom of the 90s because we were too conservative and kept everything in money market funds. And but I got pretty serious about trading in the late 2000s, around 2007 to 9. Bought all the books I could find, including Alex's great books, and started to study and try different things and signed up for various services. I've used Guerrilla Trades, I've used IBD, I've worked with Paul Duncan in his Greek God trading, and made probably all the mistakes that you can possibly make in using those and just going on faith that, hey, they said to buy, let's buy, and then you lose. So it's only in the last couple of years, since 2009, when I said kind of a turning point in my career, I subscribed to HGSI and Spike Trade probably within a 6-month period. And very soon after, about 6 months after subscribing to Spike Trade, I engaged Kerry Lavorne as my trading coach. And those of you who know me, I've said it before, and then those who don't, I mean, that was really the turning point for me, because Kerry has a comprehensive approach to trading, and he's able to take people like myself who think they know what they're doing and kind of break it down into, and plus he offers a bunch of tools that you'll see that can greatly improve your trading process. So Kerry and I had this relationship for about 2 years. I've just gone off pretty much on my own for the last 3 or 4 months, although I did attend a wonderful weekend with Kerry and Alex 2 or 3 weeks ago, where we actually did some live trading with a dozen spikers. In 2010, other key developments in my career was I subscribed to Edge Rater, and as the HGSIers know, that's Chris White's company, and he has a tool called the ETF Trading Bandit, and started using that, and I'll be showing you a little bit of that tonight. And I also subscribe to Pascal Willane's Effective Volume site. You probably know his book, what is it, Value in Time. And after reading that, I subscribe to that. And that to me is, what IBD was, Investors Business Daily, always follow the big money. If you follow Pascal, he'll tell you where the big money is going with the large effective volume. And I'm sure many of you are familiar with it, and if you're not, I highly recommend you getting out there and taking a look at the site, and we'll look at it a little bit tonight. And then finally, I'm very proud to say I was chosen by Alex and Kerry to be a spiker in January of this year, and we'll talk a little bit more about that as we go through. And the interesting thing about being a spiker is you only get 1 trade a week on Spike Trade, okay? That actually helped me to focus a bit and change my style. I mean, I always was a short-term trader, and here is my style. Day and swing trading, I rarely hold for more than 4 or 5 days, although it's always my goal to hold longer, but I can never find a stock that's trending up, although I am in Southwest Airlines LUV now for something of a record of 3 weeks, but I even at one point sold it and bought it back again just the kind of guy I am. So, but that's my general style. I rely on technical analysis. Some people, would pick up the Wall Street Journal or the business section of the newspaper and say, "Oh, this looks good. Let me go after that." Well, those days are gone. Don't do that anymore. I mainly rely on technical analysis to make my choices of when to enter and when to exit and what to look at. I trade equities and ETFs, long and short. Now, I mostly trade, when I'm going long and short for a swing trade, it's mostly stocks. It's mostly equities. And when I'm day trading, it's mostly ETFs. And lately, the ETF I've been trading the most is IWM, the Russell 2000. So, so if I see some day trading opportunities, and we'll talk about that. There were two this week, one yesterday and one today. I usually just either go long or short the IWM. And my overall approach is to identify candidates on the weekends and trade during the week. So once I've got those candidates identified, that's what I'm limited to trading for the week. Now, so now we're going to get a little bit into planning the trade. And the first thing I need to tell you, and this is a concept, a key concept for me, is that I have a basket of stocks that are pre-qualified for me to trade. That is to say, they meet a certain set of criteria that I know that if any one of those pops up on one of my screens, I know that I can be comfortable trading that stock. And this is the list of criteria. This is not new. I've presented this before to both HGSI and Spike Trade. These are the basic criteria: 10 and 50 bucks. You see their average volume. They need to be trading at least that much, and they need to be optionable and shortable. Quick ratio means they're profitable if they're greater than 1, and their gross margin, and their average true range needs to be greater than 2%. Now, you can get all of these lists on FinViz except for the average true range piece. I get that on TradeStation. So let's go out to FinViz for a minute so I can just give you a quick look at what that looks like. Can you all see the FinViz screen now? Somebody type in the comment or something.
It looks good from here, Ray.
Okay.
Looking good, yeah.
So here's today's action, as you know, on the home page, and everything went to hell in a handbasket in the last hour or so. But they have this tab called the screener, and what you can do is I actually have a screen that I'll just pull up, but you can create your own screen in FinViz using these various tabs here. So the descriptive tab, I'm looking for stocks over 500K, current volume over 200K. That really should be over 300K. And optionable and shortable. And if you go over to the technicals, let's see if there's anything there. If you go to the fundamentals, this should be where the quick ratio is. There's the gross margin, current ratio, quick ratio, et cetera. So it's not a lot of factors, but if you would do that, then you can get a list, and then you see this export link here. You can click on that, and I'm not going to do it, but then you will get a list in like an Excel spreadsheet that you can copy and paste into whatever tool you're using. So that's how I get my initial list of stocks. And now let me go back to the PowerPoint. Okay, and then I take them over to TradeStation, and I thin the list out by looking at what is the ATR, average true range. So here's my basket, and average true range is, for those of you not familiar with TradeStation, I don't have a whole lot of time to explain all this, but the average true range is going to be where here, and I think this is it. Yeah, so that's it. I need average true range %. And so what I will generally do is I will sort whatever list I have. This list happens to have, this is my current basket, has 368 stocks in it. So then I will just go through and I will look, anything less than about 2% I'm going to take out. Why is that? Because stocks with less than 2% aren't going to move a whole lot in a day. And I want stocks that are going to move over the period I have. Now, as I go through this, I think I'm going to find some stocks, since I've screened them, have really gotten high average true range. So Kerry compares these to racehorses. So if you've got a stock, let's pick one, uh, let's pick Thor here. If you've got a stock with an average true range of 3.62%, that means that, you know, on an average day it might move $1.17 on a price of about 32. So that's a nice moving horse, but not that fast. But now if you go up here to, say, SPWRA, right? That's a solar stock. With an average true range of 9.44%, well, that can move 83 cents on a $9 stock. So that thing can really run. So he compares that to, say, a really fast racehorse where you got to really watch and control that guy, to something a little more sedate at the lower ATR. So the point is, you got to watch out for these guys because they can get away from you pretty quickly. But you generally want an ATR to be in the range of 2 to 8%. So that's how I get my basket. Now, you know, it doesn't matter. My basket is no better or worse than anybody else's. If you have a group of stocks that you like to trade, you can use this approach. If you want to trade the NASDAQ 100 or some subset of the 50% institution-owned stocks or whatever, you can make up any list you want. The point is, I know from experience, I kind of get used to these. About every 3 or 4 months or every time the market does something crazy, I might do a reset and recreate this list. But I know that in almost any one of these stocks I can trade, so that's the idea. So it takes that part of it out. Doesn't mean that once I pick the stock, I don't go out and look at the latest information on FinViz or something on the stock, but it just, this saves a little time by having the basket. So any questions? Let me stop here and see if there's any questions up to this point, because I'm about to get into the actual process.
Ray, one question from Frank Anisi. How many days for ATR?
How many days? Oh, it's a 20. I think it's a 20-day. No, it's a 14. It's either a 14 or a 20-day ATR. Well, it's a 63-day. 63-day ATR.
Okay, good. And Paula Hill was asking, do you recommend that FinViz replace IBD? I guess she's asking, do you like it better?
Well, FinViz is, I think, very different from IBD. I would be like an apple and an orange to me. So, I mean, I use FinViz mainly for local. Oh, you mean for a filtering process? Not necessarily. No. If you've got, I'm just using FinViz to get me this initial screen for my basket. But you could certainly use, say, the IBD 100 as your basket, whatever that is. And then you could apply some of these other screens that I'm about to show you to that. Hope that answers the question.
Okay, and two other questions, Ray, related to that, to FinViz. One is this a weekly scan to refresh the basket of stocks? And do you need to subscribe to FinViz to get the list?
Second question first. No, you don't need to subscribe to FinViz. You can register with them, but everything I'm using is available for free. And then refresh the basket. No, I don't refresh the basket every week. I evaluate the basket every week, but the basket stays pretty much the same. I think the last time I changed it was I changed it last March when we had some kind of crazy thing. I think we went way down, and I just felt a reset was necessary, and I changed it again in August. So I change it I redo it about 3 times a year, and a lot of the same stocks show up in each basket based on the screens, but I might just refresh it about 3 times a year. Anything else?
Well, there is another FinViz question, and that is, can I see the conditions you put in for scanning in FinViz?
Yeah, they're listed on the slide deck, so when you get the slides, you'll have them.
Okay, and the other questions are technical, Ray. I think I'll wait till you get into more technicals.
Okay, so now we're going to get into what I do on Saturday morning. Okay, my prospecting I've broken my prospecting process down into 3 steps. One is I want to evaluate the market, and by that I mean I want to look and I want to see where is the market today, Saturday, and where do I expect it? What do I expect it to do during the week? And then after I evaluate the market, I want to identify candidates, and then I further narrow the list of candidates and trade stations. So let's start with evaluating the market, step 1. So as I said, my goal on Saturday is to form an opinion about the market direction for the following week. And that is a binary opinion. It's either I think I should be going long, or I think I should be going short, because I don't want to be trading against the market. So what are my inputs for that process? Well, I begin with my own personal charts, looking at the weeklies and the dailies of the SPY, the Qs, and the IWM. So let me go over to TradeStation and bring that chart up. And this is, this is right out of Alexander Elder's, 3-screen system. If he were doing this, he would start with the monthly, and sometimes I look at the monthly, but to be honest with you, in my time frames, I mainly want to know what the weekly and the dailies are doing. So I know these charts look a little complicated. Well, they are complicated, not to me, but I will try to explain what I'm doing here. So the first thing, if we look at the weekly, you can see I come away with the impression that the market has been pretty much range bound between, this is the SPY, between 123, or that would be roughly 1238, 1240, and 1122, 1120. So this is no news to anybody who's followed the market. So it's range bound, and it's interesting. By the way, let's see. This is this week. This week it's about even. I picked the market. I picked going long this week, but it's interesting. If you look at my spike trade picks, they've been alternating long, short, long, short, long, short, long for the last few weeks. And so anyway, this is telling me in any case we are more or less range bound based on the weekly. And actually, if you take this back, I'm going to do the daily now. And when we look at the daily, I want to take it back to where it was on Saturday, okay? So on Saturday, I'm looking at this, we're up, we're down, we're up, we're down, we're up, we're down. And we are down near the lower, we are down below the lower Bollinger Band. These are Keltner channels, ATR channels, and those of you who work with Kerry and Alex know this is the -3 ATR. So we're 3 ATRs below the average, the 20-day exponential moving average. So we're oversold. We're clearly oversold here on Friday and Saturday. And so based on that, I said, well, I'm looking for a bounce. I want a bounce play, and I expect the market to go up this week. And so let's see what happened on Monday. It went up a little bit, and on Tuesday it went up a lot. So I happened to be right there. And then today, of course, it went down. And if we go back, let's see if we go back last Friday, Thursday, Wednesday, Tuesday, Monday, Friday. So here's where it was last Saturday. And I said, well, you know what? We're running up to this upper Bollinger Band, and we're above the moving average, so I'm going to go short last week. And what did it do? It went up a little bit on Monday, but it gave me the shorting opportunity on Friday. So so that's step one. Okay, so I look at the SPY, and I'll also look at the Qs and the Russell, but you get the idea based on this. I should not forget to talk about some of these other indicators. On Saturday, the MACD, okay, was well, there's not much you can say about the MACD there. It was down about the same level. I'm looking at the histogram, here, and it's down about the same level here, and we know this is at the lower end of the range here. So this is telling me that there's not any more force down this past Saturday than there was 3 weeks ago when it got to about the same level. So I'm pretty confident that there's a fair chance this thing's going to bounce. All right, so that's one of the things I look at. Then go back to the PowerPoint. Then, of course, I go to High Growth Stock Investor. And those HGSI folks in the group know, oops, we have something called a top-down analysis. Where did you go? And now for the spikers, indulge me a little bit, HGSI folks. For the spikers, I'm going to show them a little bit. We have a thing that's put together by Woodward and Brown where there's a set of user groups that we look at in a view that's called a warehouse view. And we're in that view now, and you can see this has the major market indices. It has oil and gas and gold and silver and the dollar, and basically, and I have not updated this since Saturday. Okay, so today there would be a lot more green on here, but here's the force 2 and 13 days. So very quickly from something like this, we can get a sense that the market is down, is not doing well, and we can look at sectors, and we can see that sectors, these by the way are sorted by a raw score that I don't have time to get into. We can look at sectors and see that they're red, so we can see the market had a bad week. We can look at industry groups, and we can also get a sense of what's hot and what's not. And we can let's say I wanted some weak industry groups. Well, let's say I wanted some weak industry groups because I was going to short. I could click on this ranking module that I've just done, and I can go down here and I can see a long list of weak industry groups. So if I would happen on a stock that's in one of these groups and I wanted to short, that would be helpful to know. And on the other hand, if I'm looking to go long, which I was this weekend, knowing that the stock that I picked was in one of these high relative strength groups would also be helpful. So that's another aspect of HGSI. And yet another one, while we're on the topic of industry groups, is we at HGSI, we break the stocks and industry groups. We can break them into where they are relative to their Bollinger Band midpoint, and you can see that there are a couple of groups. You very quickly can see that groups in the catalog or retail are high, which means they have some momentum. Marine index, home improvement, footwear. So footwear stocks, if they came up, that would be good to know. And then we have, the lower portions of the Bollinger Band range. We have other groups that we probably want to stay away from. And of course, we can go to, let me very quickly click on catalog retail and look at that index and see where it is, so I can see whether it's extended or not. And actually looks pretty toppy to me right there, so I'd probably not be too interested in that. But my point is that we can look from this warehouse view and get a sense of where industry groups are. And there's a lot of other filters, and I'm going to get into some of them, but I just wanted you to see this as an example of the warehouse views. And again, HGSI, has lists of various lists, including not only the industry groups, but sectors and sectors by industry. So you can get a lot of different groups here. And there's also what we call smart groups. Let's say if I was only looking for stocks that paid dividends, and actually that came up a couple weeks ago in Kerry and Alex's workshop, and let's say I wanted IRA to have stocks that only paid dividends. Well, there's a list of 3,082 securities that have dividends, and then I could go through some of the similar ranking. Oh, this is a lot to do with that. Probably shouldn't have clicked that, so I'm going to cancel that. It'll take a while to do that ranking, and I don't want to use the time. So, but the point is, you can get, you can slice and dice the stocks that you potentially have in a lot of different ways. So that gives me, again, a high-level view of where the market is from the HGSI's perspective. Now, what about Chris White's trading bandit? Well, let me talk briefly about that. Last weekend when I looked, I'm going to show you, I will use this, it's supposed to be used for ETFs, but I will also use it for stocks. And depending on, what I've got here is a list of stocks and ETFs. Hold on just a second, I have to change phones because the battery's running low here. Okay, can you hear me, Deb?
Sounds good.
Okay. So last weekend, gold was coming up as a buy using multiple Connors strategies, win and whatever this MO is. And so sometimes this thing will be loaded with buys or loaded with sells. And since these work at extremes, oversold or overbought, that would make sense. But this tends to confirm, when you see a lot of buys, it confirms my notion that I should be going long this week. So I like it when I see that. Now, I happen to do it on my basket tonight just to see what it looks like now. And I don't have any buys coming up now, or any sells for that matter. I just have hold short. And so that is telling me that you know, if I'd have done this on the weekend, this wouldn't be of much use. But when I did it over the weekend, I did see a lot of buy signals, which indicates to me, which supports the notion that I should be going long. So that's the bandit. We have Ron's weekly report that if you subscribe to HGSI, you will know about. You will have the link when you get the slide deck into Ian's investing blog, which is great stuff, and I highly recommend it. So this is something else that I consult. And then I also consult the spike trade commentary. So this gives me an excuse to go out to spike and show you all, especially the HGSIers, a little bit about the spike trade. And so Alex and Kerry will alternate publishing almost every night an analysis of the market, commentary on the market, and what the Bollinger buckets are to HGSI, the new high, new low, is the key indicator for the spike trade. So we use that to signal market tops and market bottoms. So you can get that kind of input from Alex and Kerry. While I'm here, let me just show you, there are 19 spikers, and here's how the spikers are doing right now. Here's a list of the spikers. Here's their trades that they proposed on Sunday afternoon. I'll go to mine, and you can see I'm wanting to trade EGHT long, and then I give a little discussion on that. I'm going to come back to this, but then I have to make a decision as to when I should go in this trade. Now, I said here I'll watch for an entry between 404 and 416, and when we get to the chart, you're going to see that I got that opportunity on Monday morning, but I didn't take it. And then this afternoon, I thought I saw a higher low at 419, and I did get in it, but then that thing closed, where am I? But it ended up closing at about 407, although it's up after market from there. So I'm under about 2.5 to 3% on that trade, but I will watch that trade tomorrow and the next day. And so what happens is the spikers compete. And let's see, right now, Jeff has got a trade that netted 5.62%. Stan's got one at 1.47%. There's a couple of losing trades down here, and there's the rest of us in the middle trying to make our trades. And so we compete weekly, as the spikers do. And if you join Spike Trade as a member, you pay a monthly fee, but you get money back, $3 back, if you submit a trade. And here's all the members who have submitted trades. You can see there's quite a few of those. And if you beat the third place spiker, you actually get an extra $17. So you can get $20 back on your monthly. So it's kind of fun, and it gets you in a rhythm of a disciplined trade once a week, and it's a great, and these spikers picks are just a great source of input for yourselves too, to see, well, you find a spiker, you read his profile or her profile, you find out what their trading style is, and then you can kind of follow along. You can even get notified when they make their trades. So it's a great site, and I don't want to spend too much time on that because we got to get back to the meat of my prospecting process. But Spike Trade is another input for me. And lastly, we'll talk about the effective volume site, which is Pascal's site. And I always, without fail, read his comment of the day. And I'm just navigating to that now. So he's saying this is the comment we would have read this morning. He hasn't updated it for today, but he says, yesterday showed us how fragile a technical bounce can be when it relies on probable but not certain good news in an oversold environment. And blah, blah, blah. So he will give commentary, and I will show you later, he actually will make recommendations on stocks, and then I often use those in mine. And he also, for an extra fee, has what he calls the IWM, the Russell 2000 robot, and the GDX robot. Now, these are systems with trading rules that tell you when to get in and out. The GDX is gold miners, and the IWM, of course, is the Russell. And the IWM robot is short right now. So I take that into account, the fact that this robot says the market's going down. Okay, and actually I see here the position was covered yesterday for a gain of 2%, and it's currently looking for another short position, and it'll even give you, now this is something you pay for, but I'm showing it to you here. I hope I'm not violating any terms of service. But Pascal is saying that the short entry price for tomorrow would be $68.05 for IWM, and the stop is there. And then if you subscribe to this, I use this a lot. This thing has got a tremendous record, but this also tells me what Pascal's system is saying in terms of whether the market is trending up or down. And of course, there are other inputs, but I wanted to make you aware of that as well. So this to me is a very valuable site, and there's more that you can find when you visit it or subscribe. So those are my inputs, and at the end of all of that, the output is I make a decision on whether to trade long or short for the week. So that's taken about half of our time to get this far. So let me ask again if there are any questions.
Great, we have quite a few. A couple of them were technical, as I said before. For instance, do you look at support and resistance, and if so, what time frames, and do you use volume in your screens?
Right. I'll get to that.
Okay, I figured you would.
Yeah.
Let's see, when do you place your orders, and how do you determine your stops? You'll
okay, we'll get to that.
Good. Do you use stock trade station indicators, or do you make your own with easy language?
Okay, I'm not a programmer, so I don't make my own, but I do have a custom set from Kerry, a set that you'll become familiar with in a few minutes when we get to that.
Mike Paluda is asking, can you be more specific in how you get a feel for up or down the next week? I think that was asked about 12, 13 minutes ago, so
yeah,
I think
well,
you've answered it.
Yeah, I think we got that. There's all those inputs, but I'll tell you the most important one, I think that's a great question, and I've lately discovered that the most important one is when I look at that first screen of the SPY and see, you know, where the Friday's price was relative to a range or some other marker. And I'm always trying to relate a price to something, whether it's a moving average or a Bollinger Band or an average true range, a Keltner channel, and we'll come back to that as well. That's a good question.
Good. And then the last of this group is, do you choose one particular of the Connors strategies or the cumulative of all the strategies?
Yeah, that's another good question. When I'm using the Trading Bandit I'm looking for stocks or ETFs that are either a buy or a sell on multiple strategies. Now, and that's not the way you're supposed to do it. You're supposed to pick one and go at it. But I always end up doing something discretionary with those things. So, but we'll come back to that as well.
Very good.
Yeah. Okay.
That's all.
All right. So now, step 2 then. So I've decided, long or short. Once I do that, I'm committed. I can only trade long this week because I've decided. So I have to have a mindset of long. If I'm wrong, or if the market goes the other way, I have to stand aside. So now my goal is to find a stock to move with the potential to move, say 3%, in the direction that I think the market's going to go. So what are my inputs for that? I'm going to come back to the HGSI views, and I'm going to look at the basket. I'm also going to, I've shown you the ETF trading bandit, and that was a little bit of help, but not a lot. Pascal's commentary, sometimes he lists some stocks. That'll be an input. And then after the spike trade picks come out, I'm also going to be looking at those. So let's look at scenario number 1, long the market. These are the filters. This list of 6 filters are the ones that I will look at if I'm going to be long the market. Now, bear in mind, for those of you not HGSIers, there are tons of these different filters. These are the ones that I have picked. And I'm going to go into each of those a little bit. The oversold and percent B long means that it's above 1 in the Bollinger percent B value, and the kahunas and force index up. Kahuna are strong moves based on Bollinger Band, a move of, I think, 0.42 or greater. So these are kind of obvious. Well, let's see, for long the market, these are going to be stocks that are at a lower extreme of price for one reason or another. Then we also have the elder Rule 1 buy, which is basically when the 13-day force index is still green, but the 2-day force index is blue or red or below the 13. Because that, you see that in trending markets, you see that on a pullback. Free parking is one of my favorites. What is it? Free parking is stocks that are around their 50-day moving average. And if I'm going to go long, I'm looking for stocks that have come down to their 50-day, and maybe you're going to kiss that and then turn around and go back up. If I'm going to go short, you'll see free parking is on the short strategy as well. Now I'm looking for stocks that have trying to work their way up to the 50-day moving average and are going to roll over and go back down again. And then so that strategy goes both ways, as do these others. These each have counter strategies. Rule 2 sell, where the force index 2 is up, 13 down, etc. So we're going to focus on the longs. I want to let you know that. And one extra one in the longs, Box 7 turnaround stocks. Box 7 comes from IBD, and these are stocks with very strong fundamentals that are oversold. So the market's really been hammered. This helps me to try to find a quality stock. So let's go back over to HGSI Designer, and here's my August basket. I'm picking my basket, has 369 securities in it, and see, whereas before I was looking at Woodward and Brown user groups, I've now got my basket in here, and I'm going to go to the warehouse view, and I'm going to come up to a set of folder views called Ray's Weekly Primary Screen. So if I'm looking to go long, I'm going to filter these 369 securities, and I'm going to look at the percent B oversold. Okay? Now this is giving me a list of 16 securities that have percent B less than 0.4, and they're trading above their 200-day moving average. So this is a short enough list to where what I would do is copy the symbols to the clipboard and then go over to TradeStation and just put them in. And here's the percent B oversold list from Saturday. So that's exactly what I did, was I put those guys in there. And when I got to the Box 7 turnaround stocks, let's see what that gave me. That gave me a longer list and 37 securities. So I wanted to narrow that group down. So what I did was I went into the ranking module and I just chose those with a high relative strength. I think I came down to 10 or 11 of these stocks. And then I just typed those into TradeStation. So there they are. And then there's the Elder Force Index 2 down, 13 up. There's that list. Similarly, there's free parking. Similarly, etc. Now, so these were all of those. And then I went over to the Bandit. The Trading Bandit gave me these two guys, Select Comfort, which did very well until today. There was Select Comfort, what's today, Wednesday. So Select Comfort on Monday, if I'd have bought that guy right there at the open for 15 bucks, you know, I was over 16 on Tuesday, and then it went to heck again. But look, it came down to its -1 ATR, so that's probably a good buy tomorrow. This is a solid company, Select Comfort. And what we like to see, Kerry will tell you, we like to see stocks that can hold their -1 ATR. And this thing is still, well, it's in a downtrend, so it's hard to say. But if it could hold that and then maybe come down and then go back up again, that would be a stock I'd want to get into long. But again, I'm only allowed to trade long. But anyway, look at this. I've got this long list of 75 stocks on this radar screen in TradeStation. That's too much. I got to find a way to narrow it. And I can't go into all the details, but a lot of these, this view comes from Kerry Lavorne, my trading coach. And one of the things I'm sorting on is this column here, which is the Elder Impulse. Okay, so you know that the impulse can be blue, red, or green. So what I'm able to do with this %B oversold is I'm only going to look at those with an Elder Impulse of blue. So now I only have to look at 4 stocks. Similarly, for the box 7 turnaround, I'm only going to look at the blue. I only have to look at 4 stocks. It might have been 5 or 6 on Saturday, but that's what it is today. And same with the retracement stocks. So I only have to look at 3. So this is one way. So what I will do is what Ian calls the flicky, and I will look at these. Let's look at MPEL. That's, you know, this is what it would have looked like on Saturday. That's clearly in a downtrend. I probably wouldn't have liked that. DSW, though, I think that's in retail, and I remember from looking at the industries that retail is a good area. And on Saturday, DSW would have looked like this, holding at its moving average. This is a 20-day moving average. So I would take another look at this, and I would come over to Elder's, 2 of the Elder's 3 screens, the weekly and the daily. And I would look at DSW on the weekly, and that tells me, well, you know, it's working its way up. It's above its moving averages, and the MACD is coming up. And actually, I have to look to see where it was on Saturday. Okay, so it's retraced a little bit, as you would expect, and but it's not far off its moving average. So I would say there's the 50-day. No, it's not the 50-day. I'm on the weekly. So I would say not bad, not bad. It's not in a downtrend. Could go up. And then I'd come over and look at the daily. Let's take this back to Saturday, and I'd say, you know, this is looking pretty good. I got a convergence of the moving averages here. It's still, the MACD histogram is still positive, so it's still got positive momentum. For the HGSIers, this is a bullseye, and that means the %B is above 50 if it's above that yellow line, which is also positive. Force index is okay. So I would say this would be a definite possibility, and I've got a natural stop point here at these 2. Look at these, this close and this open, 43.69. So if I did get into this stock, I would want to be stopping at probably Friday's low of 43.48. So let's see what happened on Monday to this stock. Well, it opened at about 45 bucks and closed at about 47 bucks. Not bad. And you see it's at its upper Bollinger Band, so me being a short-term guy, I'd be looking to get out of that pretty quickly. And certainly if I was in it on Tuesday, I would have taken that as a +2 ATR. I would have been very happy with that kind of a gain. So that thing really popped. That thing really popped. So that's in a nutshell the type of analysis that I will do with each of these prospects. Summarizing, I only look at those with a blue force index. Okay, I initially look at their daily chart, where they are on this screen, and then if it looks interesting, I go over to the weekly and the daily. And I can also, if I want to get even more interested or more detail, I would look at how this stock behaved on a 39-minute chart on Friday. Here it is. You see it held up pretty well. It's -1 ATR on a 39-minute chart. So this looked like it was holding up pretty well there. So I can go down to that shorter time frame as well. But the most reliable time frames, of course, are the longer ones, and you use the intraday time frames just for confirmation and to look at your entries and exits, which I'll get to shortly. So let's see. I think that covers how I would narrow this, and I would do this for each of these guys. Let's look at free parking, because I'm looking for somebody who came down to his 50-day, and actually I can tell that from this group too. So here's ERTS, and ERTS has come down to its 50-day. It's actually broken through its 50-day. So anyway, without spending too much more time on that, the net of this was I came up with this list of 1, 2, 3, 4, 5, 6, 7, 8 stocks that I am willing to trade this week. And so of those, I chose EGHT for my spike trade. And I will come back to that shortly, because we're going to get into how I execute the trades in a minute. So let me go back to the PowerPoint and see where we're at. Okay, so I've now screened the basket, and I've mentioned some of these secondary screens, and I want to give you one more. No, I don't need that. Okay. I'll go back to that. So to summarize, I'm using the HGSI views, the ETF Trading Bandit, effective volume, and spike trade picks to get my picks for the week. And then I go into TradeStation, and I use the radar screen and the Elder Impulse, among other things, to evaluate the stock and narrow the list. I haven't gone into details here, but you'll have this for a reference. I'm also able to see squeeze versus breakout conditions, although squeezes have not been working well in this market. So I'm mainly looking at support and resistance, as someone mentioned earlier. And then, as I mentioned, while I was in TradeStation, I look at the weekly and the daily, and sometimes the intraday price and volume action. I look at support and resistance. And then I will also, I didn't mention it here, but I'll also, like before I trade a stock, I always go out that morning and look to be sure that it doesn't have any earnings report date. I like to look at the short ratio to see if there are a lot of short positions on that stock, and generally, and of course, the latest news to see whether it's had an upgrade, downgrade, or done something. It has some news that might be relevant to the stock. So that's basically how I get my list. So at the end of this, what I have is a watch list for the week, which I've just shown you, my spike trade pick, and I basically have trade plans based on that. For example, in the free parking, I want to see a bounce off of a 50-day moving average. In a %B oversold condition, I want to see it move up above the lower Bollinger Band, or I want to see it with volume move up from there. So in the case of long, and the opposite would be for short. So that is basically the approach that I take to picking a stock for the week. So let me stop again and ask if there are any questions there. How are we doing on time here? We're just about up on an hour, right?
Yes, 54 minutes.
We have plenty of time.
Sure.
So
Ray,
are there any questions?
yes, exponential or simple moving average, which do you use?
I use exponential. I use the 20-day, the 50-day, the 200-day, and I will also use a 13 from time to time.
Somebody is looking for specifics on free parking. How close to the 50-day moving average, other criteria?
Okay. All right. Help me out, George. Oh, here, edit. Okay, last close, greater than 5, and 50-day moving average greater than 50,000, percent closed divided by 50. It looks like it's within 2%. George, is that right?
He may not be
Yes,
on, Ray.
that's correct, Ray.
Within 2% of the 50-day. And it looks like it needs to be less than the 17-day and greater than the 200-day?
Yeah, that's the way Ron's got that written up.
Yeah, okay. And Kirkpatrick relative strength rank greater than 70. I hope that answers your question. I think fundamentally it's going to be within 2%.
Ray, do you want to take a couple more quick ones?
Yeah, sure.
Okay. Do you use effective volumes, individual stock or sector information, or do you just look at Pascal's comment of the day?
Oh, that's a great question. Thank you for asking that. I do absolutely use his I will look at the effective volume for a particular stock. And let me see. I think here is one that I traded recently. And for those of you not familiar, the green line represents the large money effective volume, the large player effective volume, and the red line represents the small player effective volume. And you can see that this is going down for the large players, and yet the price was going up. So that is a divergence. And so that's a stock that you would not want to go long in. You would want to short that guy. And sure enough, it took a lot of things took a beating today. Well, this was yesterday, actually. It rolled over yesterday, probably more today. So yes, I absolutely look at that. I look to see what the money flow is. Money flow, effective volume flow is out in a stock like this. So this is a way to confirm your pick, and I often use it. And this also shows upper and lower boundaries. So where is this stock trading at 29? Its upper boundary is 34. Its lower boundary is 26. So it tells me it maybe has a couple of bucks down to go. So yes, I'm glad you asked that question because it gave me an opportunity to show that on this site you can also get effective volume for individual stocks. Next question.
Do you trade your spike picks and your other trades differently?
Oh, that's another good question. I'm trying not to, but I usually take more chances with my spike trade picks. In other words, I usually follow my plan better with my spike trade picks than with myself. It just so happens today I am in EGHT at $4.19 in TradeStation, and I am in EGHT at $4.19 in spike trade. So I am putting my money where my mouth is right now, and I'm down about 2.5% on that trade.
Have you back tested any of your strategies?
No, I don't. I'm not really good at back testing. So, and my strategies, I think, are not automated or mechanical. There's a lot of discretion that goes into my trading. But I make a decision, and you'll see that when we go into some of these actual trades. I make a decision as to where I think I ought to buy the stock and where I think I ought to sell it. And the biggest mistakes I make is when I don't trust my own judgment, buy it where I said I should buy it. I'll show you that in a few minutes. But that's not really amenable to back testing.
I'm going to combine two questions asked by one questioner. Do you look for engulfing days or other aspects to help improve your odds of winning? And then can you kind of estimate on a broad average your success rate of your trades?
Yeah, the last couple of months, my profitable trades are running about 60%. That's another good question about engulfing bands, because yes, sometimes I look at it. I went through a period where I did use some of the candlestick patterns, and but lately I've kind of gotten away from it. And let's see, I'm looking for a filter here. If you wanted to use HGSI for this, and I now have this set on my August basket, so let's say I wanted to see all stocks that had a bullish engulfing pattern on Saturday. Well, there they are. There's 66 of them. So let's just take a couple of looks. So you could go through these. Here's one, ResMed. You can basically go. It's not very bullish engulfing. That certainly is. Charles River Labs. So you could go through using, if that were your favorite approach, and find stocks that on Saturday looked just like that, with a bullish engulfing pattern if you wanted to go long. That would be a perfectly legitimate, in fact, I might even want to add that to my screen. Thank you very much. So what I would do, since there's so many of these, there's 66 in this, I'd say, oh, let's narrow them down to only the high relative strength ones. And so then I would just go as clicky through these top few. Broadcom looks good. ResMed looks good. We saw that. ARM Holdings, strong day. Microchip Technology. So isn't this? Well, this is one of the things that really impressed me with HGSI is you could get whole groups of stocks that have basically the same pattern. And so if you're looking for pullbacks, if you're looking for oversold conditions, you're looking for false breakouts, you can using this tool, you can get a whole bunch of stocks that have similar patterns and then make your choices. So I'm picking very high relative strength stocks with bullish engulfing patterns on a weekend when I'm looking for stocks to trade long. That's not a bad way to do it. So I think that question just gave me an idea. And then for contrast, let's go down the bottom here, these low relative strength. Here's Cabela's. Well, that was pretty strong up, but that was pretty strong down. And there's other things in here like the bongos and the 2 and 13-day force index that tells me that this guy could, and you can see we're in kind of a resistance area here. There's a lot of, there's a congestion area it's about to enter, so this would be a great short candidate right here, even though it had that bullish engulfing day with a kahuna. So, but this is the kind of fun you can have with HGSI in a very short period of time. You can come up with stocks with very similar patterns. Here's another. It's the bullish engulfing pattern, but pretty weak. But this stock I wouldn't short because it's already been bled pretty badly. So good question. Thank you for that. Anything else?
On your TradeStation charts, Ray, could you briefly describe how you use the bullseye panel in the force index with ATR channels at the bottom?
Sure. Okay. What we want with the bullseye panel is we want this to be sloping up. And on Saturday, this was kind of neutral, but you can see that it has sloped down through today. So that's not a good thing. So this is the 50% line, and Ian will tell you, and I'm just using EGHT, there may be another example Ian will tell you, look at the price on this stock, 460 or so, and you see it pulling back, but you see the bullseye is still above 0.5. So Ian will tell you, don't worry. Don't worry. You don't have to get out of it. It's just a pullback. Maybe add to your position. Okay, and look, the next day it went up. And it's still, as long as it's holding above that 0.5, you should stay in the stock. You can see it's doing that pretty well there. It's coming back up. Now, other things are telling me it's getting up to its +2 ATR, and it got there before and failed. It's coming up there again. If I were holding this stock, this would kind of be a warning sign for me that I might want to take some money off the table. And then I don't know what's going to happen next, but as I click through the days, now I see the bullseye go through the 50% point, so that says, warning, Will Robinson, time to get out. So, and you can see the MACD is following that as well, and what Alex would call this breaking the back of the bull in this case, because the MACD actually went negative. So now this is a real warning sign that you got to get out. Now, what I was seeing here is this is the 50-day, and I'm seeing this thing bouncing off its 50-day moving average, and I still see the 50-day as giving it support. So that's why I'm not too worried about my position yet, because this thing can jump 40 cents, which is 10% in a day. It's incredible. Look what it did on let's see, this was Saturday. On Monday, it closed at about 425, and then went up. Well, anyway, it came down. My point is, on Monday, it had a low of 405 and a high of 441. So if I was watching that guy intraday, which I was, but unfortunately I was at a conference and I couldn't give it my full attention, I had said in my commentary I wanted to get in this stock at $4.04. So here's where it opens. It opens at 440. I said, oh, well, I missed my chance. Can't possibly trade this stock today. What does it do? It goes down to 410 or so, and then it bounces up again. I still wasn't in it, and it gave me another chance. It goes back down to 407 or so, and but what I didn't like about this is the market was up. The market was up over 100 points. I'm saying, why the hell is this stock going down? I'm not going to trade it. Well, if I would have, and then it goes up, and now it's holding its minus. This is an 8-minute chart, by the way. So if I'd have gotten in here at 412, it ended up closing the day at 426. Well, 4 cents is 1%, so 412 to 426 is 22 cents. That's 5%. And then look what it did the next day. It went to 440. So I could have gotten in at 412, gotten out at 440, about a 28 cent, almost an 8% gain. Oh, it even went higher than that. Went to 445 before it rolled over. So, what was my point here? This is how I'm using the ATR channels to follow and enter and exit the trade. You could argue this was a double bottom, but I talked myself out of it because this went lower. This was a lower low over here than over there. So I'm just not, I don't trust this stock. But if you read my commentary, this is where I wanted to get in. This is where I figured it would hold. So anyway, and then of course since then, look what's happened. Come right back down to test that level again. Now if this gets rejected tomorrow, we could be off to the races again. We'll see. Sorry, that was a long answer, Deb. Next one.
Well, we have quite a few, about 6 or 7 more questions. I don't know if you want to continue a little bit and take them later, or I can give them to you now.
I better get through the rest of my talk.
Yeah,
I don't have
why don't
much
we do that?
to go.
Yeah, good.
But I better do that, and then we can open it up. Okay, so here are some examples of recent trades. ETF, using the ETF trading bandit. Some of you, if you're in the HGSI group, you may recall on August 9th, before the market opened, I ran this thing on the 8th, and I posted the following message. The bandit says to buy the following stocks from my basket. It's on multiple Connor strategies signaling to buy. So imagine that bandit chart with a bunch of greens across all the different strategies. I came up with this list of 3, 4, 5, 6, 7 stocks, which basically, if you followed the Connors method, you would have bought them at the open on August 9th. So what happened to those guys on that day? Apple was up 22%. Cubis, 2, Crocs, etc. You can read this. All of these stocks were up. And the market itself, just for comparison, the Russell was up almost 5%, the SPY almost 6%. So these stocks, that signal was a pretty valid signal. Now the next day was a down day, okay? The Russell was down 3%, the SPY was down 4.5%, but these guys all held up pretty well. So my point is, you could have used that, and I don't do this a lot, and it doesn't happen all the time. But when that bandit gives you a bunch of stocks where all the strategies, 6 strategies are saying buy, take a few bucks. This is what I'm going to do, and it won't be a lot of money. It won't be a lot of shares until I convince myself. But I mean, this is hard to beat. So, and these guys generally will do well for a couple of days at least, unless the market completely rolls over. So that's one example. It's not a back test. It's kind of a forward test of how you can use the bandit to identify candidates. So now I'm going to do some of my spike trade picks. This was the week of 9/12. Okay. My pick was CNK long, and the filter I used was %B oversold to get this one. So in my discussion, I said the market is cycling within a range, and I think it will rebound a bit this week. CNK has been very well behaved during the past month, moving up and down with the market, showing support at its 200-day and resistance at about 21.20. So that person who asked, yes, I pay a lot of attention. I like to have some kind of reference. I always have some kind of reference point for the stock. A moving average, where it is relative to an ATR, a Bollinger Band. I never trade just on naked price. Okay, so it showed good support at its 200-day. I said I'm going to watch for a dip near the 200-day for an entry, and then ride a market bounce, hopefully to 2050 if possible. So here's what happened to this stock, and this is a 39-minute chart. A 39-minute chart divides the trading day into 10 bars. So I got an entry on Monday at 1943, which I think was right in here somewhere. And it was holding its -2 ATR, okay? And then I just wrote it. And it never, I was watching for it to dip below the -1. It never did. And on Thursday, I got out at, I think it was this part of the day, it popped up to its +3, couldn't hold it, +2, couldn't hold it. And I got out, I think, somewhere in here, 20 bucks for a profit of 5.1%. So there's an example of a long trade. The next week of 9/19, I chose CTAS short. Now, where did I get that pick? I'd gone through all my other picks. Nothing really spoke to me. Nothing really sang to me. So one of the things I had done is Pascal had a commentary on the 15th of September, which was the week before, and he basically came up with this list of stocks, which you see here in the middle of the page, that he thought were good short candidates. So I had copied this list into TradeStation, and I took another look at it because I knew I wanted a short, and I picked CTAS from there. So there's another example of an input, using the methods that I've given you. So here's what I said. It's top my list because of its strong MACD divergence and a key reversal triggered down on Friday. I'll watch for an intraday reversal or a break below Friday's low to enter the trade with a target near the 200-day moving average. There's that reference point again, and a stop about a half ATR above the entry for this reversal of 3. So what happened there? I got my entry on Tuesday when it failed to hold the +2 ATR at 31.45, and I got my exit on Thursday here at 30.45. Where is that? Thursday, Wednesday, Thursday. That doesn't seem to match up. Oh, Wednesday, sorry. Yeah, that was a mistake because if I'd have held it till Thursday and Friday, I'd have made more money. But I saw this and I got out right right around here because I thought it was going back up, and then it really rolled over, so I missed a lot. But I still got a 3% gain on that stock using that method. And currently, as I told you, I'm an EGHT long, and you know, I have to say in front of all of you, shame on me for not following my plan. Because what did I say? I'll watch for an entry between $4.04 and $4.16. Well, Monday gave me that opportunity, but I didn't take it because I didn't trust it because the market was up and this thing was down, or a breakout above Friday's high. So what I ended up doing is I thought I saw a higher low today at 4.19, and I got in there. If I'd have waited, I would have gotten another chance. I could have gotten in at $4.10 very easily today if I'd have been patient. So shame on me for not doing that. And I still think this stock has good potential tomorrow. You all might want to watch it and pick it up. You know, if it, my guess is it's going to open about 4.15 or 4.20. But if it comes back down and tests that level, it has not gone below 3 like ever in a long time. So if you get it in the low 4s. You might see it run up again in the next few days to 430, 440. So that completes my formal presentation, and let's take some more questions, and let's also look at some picks that you may have.
Okay, maybe we can go through a few questions here, Ray, and then we do have one pick someone wants to look at.
Okay.
It. I think it's an oil ETF.
Okay.
But some of the questions, is it possible to obtain the custom indicator files from Kerry or Terry?
Yes, it's possible to get them from Kerry, but you have to sign up for his service. It's not something that he sells independently of the service. There's a lot of training that goes on around these, a lot of videos and training.
Okay, how do you pick your position size, Ray?
Okay, I generally I use basically Tharp's and Elder's methods described by Tharp and Elder. I decide how much I'm willing to lose on the trade, and then I buy the number, and then I decide where my stop is going to be, and then but typically I'm only risking $100 to $300, $100 to $200 per trade. So I position size based on that. And by the way, Kerry has a system that allows you to that will tell you with EGHT, for example. Let's see. If I want to risk $200. Then I can buy 603 shares based on that. So there are, I do it in my head, but basically, let's say if I was, you know, I know where my stop's going to be, and then I calculate, well, how many shares can I buy to risk $100? Next question.
Sure. Do you suffer from information overload?
I used to. You know, I used to go through way more views in HGSI, and but actually, the system I've described to you this evening, I usually have my first cut of picks inside of an hour on Saturday. After I've updated all of the things. So altogether, it's maybe 2 hours work on Saturday, and then I sit on them overnight. I usually come back to them Sunday morning, and generally within about 30 to 60 minutes I have it. So I used to, and now that I have this system, it's been working pretty well for me, and I'm confident of it. So
that's great.
No, not anymore.
How many active trades do you feel comfortable with?
Right. Kerry has coached me and others that and Alex as well, that we never have more than 5 or 6 trades open at any one time. I have 2 trades open right now, LUV and EGHT. I was buying, and I was doing that. And actually, let me digress for a second and show you a trade I did yesterday on the Russell. As I mentioned, when I have time, you know, and during the day, and I can watch the market a little bit. Here was the Russell on a 200. So let's see, this is a 2 million share bar. So these bars are by volume, not by price, not by time. And so what I noticed here on the Russell was at around 2:45, 3 o'clock, a little bit before 3, it had hit its +3 ATR with a doji, and then started to move down. And the other thing I noticed, this is my day trading chart, is that the VIX, which I watch at the same time, I watch the VIX and the tick, and see, I got to get back to the right day. Yes, this was yesterday. The VIX started to move up right around the same time. So now we've got fear moving up, and this thing's starting to roll over. So I got in up here at about 69 bucks, and I got out at about 67.50, 200 shares. So that was a $300 gain right there. But you can see what the VIX did, and as long as that VIX kept moving up, I was in that trade, and I was also watching the tick, and the tick was staying below. So for your day traders in the group, I'm just pointing out that you can use the VIX as well as the tick to confirm some of your trades. And other things were happening here too. The MACD was bearish, and the Force Index was heading down. So, and this is the bongo for your HGSIers. That turned red after I got into the trade, so that confirmed it. So that's just a quick side digression. Go ahead, Deb, next question.
A comment by Tom Payne that Kerry will sell the indicators without becoming a client. Okay.
I don't think he will.
Oh, really? Tom is indicating that, okay. Yeah.
Well, you can certainly contact Kerry and talk about that.
Sure. Tom Astley is asking, how do you handle money management and position sizes?
Right. Well, I have, depends on the trade, I guess. I generally, that's such a broad question. I don't know if I can, answer that in 25 words or less, but it all is based on risk. I'd have to say that. So if I'm, what am I willing to risk on this trade, and do I have a clear point where I know that the trade is bad. So let's look at the Select Comfort on the daily chart. This will give us an example. So yeah, Select Comfort is showing me that if the price drops below the -1 ATR, I'm wrong and I got to get out. Okay. So if I know that, and let's say I'm buying in here. Okay, so if I'm buying at 15 bucks and the -1 ATR is at 14.55, so I would probably go a little lower than that, maybe 14.45. So that means I've got 15 less 14.45 is 55 cents to risk. So whatever it takes for me to risk, maybe I would risk 100 bucks on that. So that's basically, that would mean about 200 shares that I could buy. So it all starts with how much am I willing to lose. So I know if I've got 200 shares of this guy and it drops down to 14.30, 14.40, I'm out. That made, it's going south. And you can see when it has gone below there. It hasn't stayed there for very long, but so I like to have a clear support line, or if I'm going short, a clear resistance line. In fact, let's take another look. I know Clack had a good week. And here again, the -1 ATR, if it would go below that, then I'm out. So initially, and this is Monday, I might have a smaller position size because I'm starting up a little higher there. or maybe I would decide on the fly that I'm going to get out. And anyway, you got to know where your stop is. So it all depends on your stock, and then it's all driven by how much you're willing to risk on the trade.
Ray, we have a number of other questions, but what we might want to do is I'll ask you one more, and then Alan G. has asked for an analysis of UCO. There might be a little time to do that.
Sure.
What do you think? But here's a quick question, and that is, I thought ETF Bandit was only for ETFs. Are you simply loading a list of stocks for the Bandit to review?
Yes, and first of all, you're right. It's only for ETFs, but I'm using it to find extremes of stocks. And that doesn't mean to say, it's not to say that I don't use it for ETFs. I have the Connors ETFs in there, and I have my own favorite list of ETFs in there. But I also find that it can work for stocks, as that example showed. But you're right. I mean, strictly speaking, if you're following the methodology, you do not use it on stocks. It has not been back-tested successfully on stocks. Nobody in their right mind except Ray Ebert will tell you to use it for stocks. You're supposed to use it. It's been validated on ETFs only. Good question. I'm glad you clarified that. But I find it gives me some pretty cool picks, you know, and it's not the only. I don't trade it. Strictly according to the methodology, where you would buy on the close or buy on the following day's open, and then watch for the sell and get out. I don't necessarily do that. I use other things like the ATRs that I've shown you, support and resistance, and price relative to EMAs to determine when I'm going to get out. So I use it just to identify candidates, and then it's a very discretionary trade after that.
Now, Ray, what we can do, I know you're going to look at UCO. We can stay a little after if you're interested to answer some of the outstanding questions. I'll let that up to you.
Well, I'm here for the duration. We're about 3 minutes over. We started about 5 minutes late, so we're coming right up on the time. Okay, good. UCO. UCO is a ultra crude oil, looks like, stock. So this is a long position, a long ETF for crude oil, right? So first thing I want to tell you is something that Alex Elder told a group of us 2 weeks ago that was burned into my brain. He said, never trade oil futures or oil stocks. And the reason is he thinks it's too risky. And the reason he thinks it's too risky is all somebody has to do is blow up a ship in the port of Hormuz, or some war has to break out somewhere, and the price of oil is going to go from wherever it is to $150 a barrel. So that's the risk you put on. I suppose if you're trading long, that's not a problem. But so that's my general comment, and I don't trade oil ETFs. Now looking at this one, what I see on, let's look at the weekly first. What I see is an ETF that is in a downtrend, no question. So this is the 50-day. No, this is the weekly. So never mind that. But all of these moving averages are in a downtrend. What I also see is that the -2 ATR is kind of hugging that -2 ATR, and that's providing resistance for it moving up. What I also see is that it's kissed its lower Bollinger Band 1, 2, almost 3 times, and it hasn't really bounced off of that. What I also see is it's trading lately, it's trading in a range roughly between here and here. So I wouldn't want to go long. When I see something like this, first of all, I don't want to go long anything until it breaks out of that range. And then the other thing that's appropriate to do here is to do a little Fibonacci. And, you know, you could see that this, technically, this would not be in a confirmed uptrend until it got up to its 38.2% Fibonacci retracement line, which is $40.80, and here it is down to 28. So it's not a good short to me because it seems to have some kind of support down here. It's at historic lows, at least recent historic lows. And it's not a good long candidate because all of these buyers up here can't wait to get out if they're still holding. And there seems to be 1, 2, 3, 4 days of resistance at this $36.10 upper boundary of the range. So the only thing it's got going for it is today was a key reversal day, meaning that the price traded, it opened and then traded lower than yesterday's close, yesterday's low, and then closed above yesterday's open. So that's a key reversal, but that is the most lame key reversal I've ever seen because it's still closed near the bottom of its trading range for the day. So for those and probably a few, let's look at this MACD. MACD is still, negative. So I would say that I wouldn't touch this with a 10-foot pole. Any others? I love doing this kind of stuff. This is the fun part to me.
I think that's the... no, we have some questions though. Well, somebody does want you to look at one. This came in, Del Dillon. He wants you to look at CVS. He thinks it's interesting.
CBS or VS?
C is in cat, V is in Valentine, S is in Sam, like the drugstore.
Drugstore. Okay.
No, I don't know if it is the drugstore.
It is the drugstore, yeah.
Okay.
Care mark. Okay, interesting. It has, looking at the weekly, it's the bears have pushed it down to about 34 bucks, but they've been unable to get it to go below that. You have a little bit, you have a MACD, not a divergence, but this seems to be, unwilling to go below this value. So this is something you could definitely watch. When you go to the daily, it's clearly in a downtrend. You've got the, this is the 13-day moving average below the 50-day and the 8-day. So this is clearly in a downtrend. I would say that this, it's early, but this is something you could watch for, and I would use the Fibonacci's here too. And let's pick this one. You could just kind of keep an eye on this because it seems to be at a low, but you would need to see some reversal. You would need to see this MACD coming up. You would need to see, if you use the bullseye, yeah, don't worry about that because you probably don't use it. But it's still got, I'd say it's something to watch because it's established. It looks like it's got support at this 34 bucks, whatever it is, but it's not ready for an entry yet. An entry would still be risky because it could come up. It could come up here again and then just roll right back over. So it's still early. Anything else? Any other questions, Deb? Let's do some questions. And we'll wrap it up.
Sure. Let's see. How do you decide where stops should be placed?
Okay. Several ways, and I've kind of brushed up against them. If I got a stock in an uptrend, here's an example. So this is a daily chart of DSW. I think they're a shoemaker. Now you can see what, if you look at the ATR here, the -1 ATR is providing really good support, okay? So this is a place to buy when it comes down here. And then if I can get 2 ATRs out of this, I want to take some money off the table, maybe 1/3 of a position off the table, and this is Kerry's coaching talking. And then, you know, is this really going down, or is this just a pullback, and do I want to buy more? If it gets back down here between the -1 and plus, I would basically, if I wanted to hold this long term, I would be setting my stop at this -1 ATR level. And that's why these things are so valuable, Kerry's methodology. So that's about $42.90. So that's one way, by its behavior relative to an ATR. Another way is by its behavior relative to a moving average. And so on this daily chart, the yellow line is the 50-day exponential moving average. And you can see, at least in this latest group of moves here, that may be a logical place. Now, you don't put the stop right at the moving average because the market makers will go down and take you out. You put it a little bit below, but the point is, if you wanted to hold this long term, you might place a stop at the 50-day moving average. I generally don't use trailing stops because market makers see those and they come down and get you, and then they turn around and they bring the stock right back up. So not a big fan of trailing stops. In fact, in general, most of us in the spike group, we try to use mental stops more than physical stops. Now, if I want to hold this long term, in this particular example, I would just want what you might call a catastrophic stop. You know, I might place a stop here at the -1 ATR, which is way the heck, it's you know, a long ways or even a little lower away from where it's trading now. So that there's really no chance, unless there's some kind of a disaster, of this thing hitting that. So for a longer term trade, you've got to place your stops farther away. And by the way, here's the 200-day moving average. You can see it's hit this a couple of times. This time in particular, this was a nice little signal here, and it bounced off that and moved up. So it's highly unlikely to come back down to that. Well, who knows? Anything's possible. But you know, so my point is, I guess, that I'm going to try to use a moving average or something related to the ATR, or something related to how much risk I've got in this thing. Again, the risk is the most important variable to tell me where to put that stop.
Ray, do you use a 39-minute chart with 1, 2, 3 ATR bands for entry?
Yes, I use a 39 or an 8. I prefer to use the 39 when I can. So let's see. The reason I'm hedging is because I realize in retrospect that the VGHT, the 8-minute chart, would have helped me a lot more than the 39 that I was following. But generally speaking, I want to use a 39-minute chart, and I want it to be showing something like this, where I've got solid support. If I'm going long, I've got support here, and then I see, I mean, ideally what we're looking for is here. It's called a false downside breakout, okay, where the bears tried to take this guy down. He opened here, went down, and the bulls pushed him right back up to here and then continued up. So this is a really strong entry signal here on the 39-minute chart. It's moved one full ATR up, okay, and then now it's holding the -1 ATR on the 39-minute chart. So that, you know, hindsight's 20/20, but that would be a perfect entry. When when the price gets up above the moving average, and particularly above the +1 ATR, I don't want to get in that stock because it's already moved up a lot, and the upside is limited. And you can see what happened here. It gets up to the +2 here, and probably elsewhere on the chart gets up to the +2, and then starts to roll over. So you can you go back and look at the history of these guys, and that's where these ATRs are so great. Now, on a same stock on an 8-minute chart today, and let's see, let's go back to Monday. 8-minute chart. Okay, so here's where it closed on Friday. It opens considerably higher, $2 higher almost, and then it comes in and kind of fills the gap, but it hits this moving average on the 8-minute chart, and that was all she wrote. So the bulls wouldn't let it go any lower. So this again is a good entry signal, particularly when it gets above this opening range here for this first above that, you know you got something. So yeah, the upside, you got to worry about it a little bit, but then look what happened. So that would have been a good trade. So you kind of what we like best in order is false downside breakouts on longer time frame, 39-minute chart is best. And then, but then also if it's holding a -1 ATR, -2 is still in a downtrend, so you're not caring so much about that. But generally, you want to be making your buy between the -1 and the +1 ATR. Hope that was clear. That was a long answer. Anything
Okay.
else?
Yeah, there is. And we're only we're 10 minutes over, but I think we've got a good crowd here, 50 people. So I think we can keep going a little bit.
Okay.
Have you considered using EdgeRater Pro versus ETF Bandit?
Yes, I have, and the only reason I haven't is I haven't trained up well enough on EdgeRater Pro. I own it, and I bought it with good intentions, but I have not learned how to use it effectively yet. But I think it's a great, it is a great screening tool, but I'll tell you this, HGSI has a lot of the capabilities, and I think Chris would be the first to admit to tell you that, to agree with that. But the thing about EdgeRater Pro is you can do all kinds of back testing. And that's one of my developmental goals is to figure out how to use that EdgeRater Pro. I did buy it. I do own it.
What is the cost to hire Kerry as a personal trainer?
You'll have to talk to him. It varies depending on the level of service. Don't quote me, but it's on the order of $80 a month or something if you're going monthly, and it can be as high as $3,000 a year. I mean, Kerry will come to your house, or you can go to his house, and you can use him at various levels. So depending on the level that you want. But once you become his client, then you get access to his indicators, which I think is worth their weight in gold.
Have you tried the effective volume indicator on TradeStation? If so,
yes.
Is it working for you?
It doesn't work for me. I have tried it. Here it is on DSW, and I don't know. I can get it. You know, this is a 1-minute chart on DSW, and I have not been able to use it effectively. Obviously, the green is the big money. So, you know, this thing, price is coming down, and it's coming down. Big deal. Doesn't tell me anything. You would want to look for divergences, but I don't really see divergences most of the time that I look at it. See, I just put another one up in EGHT, and it didn't even give me the line. And what I do, sometimes what you see is the effective volume is holding steady, and the price is moving up or down. And that tells me to somewhat ignore the price until I see the large players move. But the bottom line for me is on a daily chart, an intraday chart, I have not been able to use it to any advantage.
Ray, we have one more question, then two stocks to look at.
Okay.
And I'm thinking if you want to answer the question, then maybe the diehards can stick around if you have
Sure.
the energy to look at two more. The question is MACD histogram / price divergence on daily. I'm not sure.
Well, we have this thing called a MACD divergence. I don't know if I can find a stock that shows, well, lucky me. I just pulled up Aruba Networks.
Oh, that was in, Alan G is saying that was in reference to his stock pick, UCO. So that's what he was asking.
Oh.
How that
okay.
looked on UCO.
Let me see. Okay, well, you've got your A, B, C here. But see, at this low, well, this low is lower than that low is what I'm looking at. and this histogram is lower than that, so that's not a divergence. What I see this telling me is that while the price was in this range, okay, the histogram was getting weaker, okay, until finally broke the back of the bull, and you see you had a hint here. You had a hint here that it was going to happen, and then now, but I don't see a divergence. Well, you could argue that, all right, so it's come down to this level. Prices come down to this level, and you have a divergence here where the MACD is shallower up here than it was back here in August. So yes, you could call that a divergence, but it's, for some reason, it's just not convincing to me. This slope is still down, so it may end up being a divergence. I would say the only thing that could get me back into this, Alan, is if this histogram would come back up through the zero line and break the back of the bear.
Request for two more securities, SPRD and BAC. I guess that's Bank of America. BAC.
Yeah. Spreadtrum Communications had a rough day. Okay, let's look at the weekly. Well, this must have been an earnings event on July 1st or something, and what I see it doing is I see the EMAs are bullish. I see that it's having a pullback this week. I'm on the weekly, but the momentum is definitely positive on this guy. So if we go to the daily, I don't know what happened today. Did it have some news? Oh, it declared a dividend today, or no, the 26th. So no particular news. What's the short interest? Not too bad. Okay, so nothing much to explain this. Boy, it came down to its 200-day. I would say that, let's see, but the MACD is negative. I would say that it may be viable here because it's right at its 200-day, and look how its 50-day is trying to come up and cross over that. So this could be an area where it's going to get very strong support. I would see, even though it got hammered today, I'd try to figure out why. There was a lot of selling on above-average volume, but you know, who knows? Maybe there's some news that's going to come out on this guy or not. But I would be interested in this stock because it's a very low-risk trade in here. You know, if you bought it between 1810, which is the 50-day, and 1860, if it holds, they tend to hold their 50 days, 200 days, if the market would go back up. So let me look at a 39-minute chart here. Yeah, you see what it did on the 39 is it came down and it had a downside breakout, but then it closed higher at the end of the day, and it's even more obvious on the 8-minute chart what's going on there. So yeah, I like this guy. The reason I like it is because it's a low-risk trade relatively. I mean, I don't know much. I would research this a little bit more, but it might right now be in an area with pretty good value. Oh, it also kissed the lower Bollinger Band today. So those, for a trader like me who likes to trade the extremes, This looks very interesting. It probably shook out a lot of these guys who bought up here are nervous. I would give it some time, but I would watch it, and I might pick up a small position, partial position in this area here, and then watch it for a while. I bet it goes back up and goes down and retest, and I can pick up some more then. I wouldn't do a full entry, but I would watch this develop. Next.
BAC.
I'm not so good with bank stocks. I don't do much with them, but let's see what the charts say. The charts say that it's on the daily, it's near its lower. Well, it's clearly in a downtrend. Look at the weekly, okay? And the momentum is clearly down. Look at the MACD. And, you know, there are people, when they see this, they say, oh, it's a great bargain. This stock was trading up to $15 just 6 months ago. It's got to get there sometime, but not me. It has to prove itself to me. So I would say, you know, this is very risky in here. You have to see evidence that it that its trend has changed. And right now, my expectation would be this is a key reversal up here, so that kind of sets an upper boundary. And this is a key reversal down here in the opposite direction. So that sets a lower boundary. So it's pretty much in a range here. And if it broke down from this range, I would be interested in shorting it. If it broke out from this upper range, I wouldn't be interested in going long because it's got all this congestion up here, all these guys who bought up here and here who are maybe still holding and are going to start selling and will keep the price low. So to me, that's not an stock. And its MACD is still negative too. Okay, are we near the end?
We are. We have one more request, and we still have
Okay.
42 people with us. So, Ray, if you're up for one more, and
Sure.
if not, that's fine. You sure? And I think this will be it. So I appreciate everybody sticking around. This is QLD.
That's the inverse Q. Right? No, that's not the inverse. All right, so that's the double NASDAQ. Let's see. Well, the NASDAQ, like the SPY and the Russell, is in a range. So that's the first thing you got to notice here. And I don't know, at least that much of a range. Right now, it is in the middle of that range on the weekly. And so for me, I like to trade extremes. So if it's going to get down here, I'd consider it oversold and would be interested in going long that week, and vice versa. If it's up here, I'd consider it overbought and interested in going short. But you know, the most important thing you got to notice about the NASDAQ is it's trading below its 200-day. It's trading below its 50-day, and I mean, you could short it potentially, but anything you do with this has got to be short term. You know, so you could short it down to its -1 ATR on the daily here, which is about $75. So it's 78 now. You can potentially short it, but what it's probably going to do tomorrow is it's going to bounce a little bit up. I think. Who knows? When they get news out of Europe, all the indexes will move up, and when they get good news and bad news, they'll all move down. So I don't see any advantage to trading any of these index-based ETFs until they're at some kind of an extreme. Now look over here. You know, here we've got a whole different formation here. We've got a double bottom that went back from August 9th. We got another test August 19th, and then rejected that price and then started to move up. So these are the areas, the extremes, where I'm interested in trading these for more than a day. And then similarly, if it got up to its 200-day, well, I was going to say it happened. It got up to its 200-day, and then it was rejected again. So I'd be interested in trading it up here at its 200-day short. So you know, these are not good, in my view, for trend traders, or I mean, these are only good for day or 1 or 2 day trades, in my view, all of these indexes. And you saw how I did, you know, I'll have a little fun with something like this. This could have been the Qs. I could have done the same thing with the Qs. But that's not for the faint of heart. That takes experience, and believe me, I've got the bruises. Okay, anything else?
Well, we do have 2 questions, Ray, if you want.
Go for it.
I think it's going to keep coming. I told them you would email them, but if you're happy to take them, great. If you were using a MACD histogram price divergence, which other indicator would you use with it?
I'd use the MACD, and I'd use the force index. I'd want the force index telling me that I was blue, or the impulse telling me that it was blue, which means I have permission to trade it long or short, and then the MACD. And that's actually what Kerry and Alex, mainly Kerry, use. That's all they use. I like to throw the bongo in there, but so for Kerry, let's pick a stock. Here, Activision. Okay, so you know, the MACD false downside breakout, you know, is telling you it's okay to trade. The impulse is blue because the bar is blue. I don't have the impulse down here. The bongo is green, and it was in a slight squeeze condition. So yeah, I mean, you have permission to trade something like this. Now, I wouldn't buy here because look at this, there's some resistance at this price level going all the way back to July. So I wouldn't buy here. I might short it here. But, you know, the opportunities were back here, where you had a MACD crossover, this is a great opportunity. You're in the -1 ATR, -1 to 1 ATR range here, and you had a MACD crossover. It doesn't get any better than that. Let's see. Yeah. So I don't know. I hope that answers the question. Maybe I'm getting a little tired here, but that's how I would use. I would use the MACD, and I would also use the force index. You can see these bars are blue, which means I have permission to trade them long. So this was a great setup here back in mid-August. But once it gets up here in the +1, +2 ATR, I'm not interested in going long, because you can see every time it gets up here, you know, it tends to pull back. I'm more interested in going short when it's up here.
Ray, the very last question, and we're coming up onto 2 hours, and that's impressive, because you and I aren't alone. Okay, do you trade in a bull market differently than a bear? For example, do you tend to sell rallies in a market like we have now, and will you buy the dips?
I trade such short term, so the answer is no. My trading in a bear market is the mirror image of my trading in a bull market, and that took quite a long time to do, to get that, get my brain wired properly to do that, and it's not something that came naturally to me. I was always thinking, well, I got to buy, and it's got to go up. I couldn't imagine what the reverse, the mirror image, the converse, whatever the right word is, was. But now it's no problem for me at all. Like looking at Activision here, you know, I see this +2 ATR, and then I see, you know, a month later it's hitting the same price level, and I'm seeing a double top, and then I'm seeing a double top over here, or another top, you know, touching the +2 ATR, and I'm thinking short all the way. I'm thinking there's not much left in this stock for a long play, and I want to go short. In fact, I'll bet we're also getting into a Bollinger Band here on the 25th of July. So let's go to the other chart. On the 25th of July, yeah. See, on the 25th of July, we were also getting into the upper Bollinger Band. So this is a screaming short to me. If you looked at it from here, see where it got to the +2, kissed the, this is nice when I've got more than one indicator, a +2 ATR plus the upper Bollinger Band tells me, and then I get it again here on the 25th of July, false upside breakout, I'm shorting that sucker. And to me, it's just second nature. But to most people, it takes a lot of time to adjust the thinking. So the short answer is I determine on the weekend, am I a bull or a bear? And then I use basically the same approach, just either long or short during the week. And right now, I mean, even thinking longer time frames than the ones I've been describing, you have to be bear. You have to be a bear. The moving averages are all pointing down. So you have to be thinking inverse ETFs, or you have to be thinking, if I'm going long, I'm just doing a bounce play, and what I really want to do is go short. Okay, have we put everybody to sleep?
No, we've got a great crowd, and I think they're very engaged, Ray, and a lot of accolades for the presentation.
Well, I want to thank you all. It's educational for me to have to put this together and articulate this stuff. So I benefit, and I certainly have benefited from this opportunity, Deb. I appreciate that, and I hope to see some of you out there. If you want to communicate with me, you probably all know my email address, and we'll get the slide deck out to you. And really, really appreciate your participation tonight. It gives me energy to get this opportunity, so I really appreciate it.
Thank you so much, Ray. And if you want to see an encore performance, Ray will be on videotape at our Learning Center. We should have that up by tomorrow morning, I would think. So I think you all know how to get there. And again, thanks for joining us tonight, and keep an eye out for our next webinar. We're planning it now. Okay, take care.
Okay, good night, everybody.